Good morning, everyone. It's Gail with Traders Help Desk, and in this video I wanted to go over the binary signals just because I've had some questions about it. So this morning we've had three binary signals, one on the USD Swiss franc, one on the Aussie dollar, one on the British pound. Notice that all of them tell you it's coming off of the 15-minute chart. That immediately tells me I'm either going to use a 2-hour binary or a daily. Now, my favorite, of course, is the 2-hour binary. Now, notice that it tells us to either buy or sell, and you have a choice of either at the money or out of the money. Also gives you the price for the at the money, okay? So in this case, on the USD Swiss franc, you're going to buy around 98.25 for at the money. For the Aussie dollar, it's 78.32. For the British pound, it's 35.41. So here are the three charts, and the dots indicate exactly where the signals came in at. So that just makes it an easy reference. Now, for those that use the indicators, I have set my higher time frame to a 30-minute chart, only because we don't want to go into an overextended market. So in this case, you see we have the dot here. We're also overbought on the stochastics, both really good indications, and you are not overextended to the downside on the 30-minute chart. Now, you did have a reversal bar here, and you also had a reversal bar here. You could have taken either one. Then on the British pound, you see that the entry signal was here. Again, you're not overextended to the downside on the 60-minute chart, and that's important, and it's one of the reasons I changed from a 60-minute to a 30-minute. We need a heads up on that 30-minute. Then when you come over and you look at the USD Swiss franc, this is your entry signal. And notice that when you get the reversal bar, that the stochastics is already below the overbought line. So that's pretty important to make sure that you're not buying into a market that is overbought. So in all three cases, this one would have made money. The signal came in at about 7:30. You would have targeted the 9 a.m. binary option, and of course, you would have made money on the British pound, the USD Swiss franc, and the Aussie dollar. But again, it would be very important for you to see that the stochastics is not oversold on the higher time frame when you go into the market. The difference is between entering on this bar and entering on this bar. And this is why I have changed over to the 30-minute, because we can see that this retracement has already completed on the 30-minute chart, giving you safe passage into the downtrend on the 15-minute chart. Also remember, you have the choice of entering at the money or out of the money. And the one thing that I look at is, okay, if the markets are moving really slow, then I'll do an at the money off of a reversal bar. So the signal came in on the Aussie here. The reversal bar was here. So I would have chosen the binary option that was closest to where this price bar closed. And I think in this case it would have been probably 78.26, something like that. Then here your reversal bar was here. Okay, so you would have entered at the money here or out of the money, which is 10 pips different on the GBP US dollar. Now on the USD Swiss franc, you could have entered an at the money at the close of your reversal bar, or you could have went 4 pips out of the money. The 4 pips out of the money is pretty easy to get, whereas, the ones that have 10 pips strike width are a little bit harder. You have to make sure that it's moving for you to get that particular one. And I just wanted to show you visually the difference. On the British pound dollar, you can see that the strike widths are 10 pips. So it would have to move 10 pips minimum if you're going out of the money. Typically, I like to get 2 strikes in the money to get my profit target. So that tells me it has to move at least 30 pips, and that's where the difference is. If you had entered at 35.26 was at the money, you would have to go to 35.16, and then to take a profit target, you would actually have to get to 34.96. Now, a lot of this depends on how close you are to expiration as well. But in this case, on the British pound dollar, you're probably better off taking the at the money versus out of the money just because of the strike width. Now, you don't have that issue on a lot of these other currencies. For example, on the Aussie dollar, the signal actually came in at 78.34, and you can see that there was a strike at 78.30. Now, this is important because if you have a strike at 78.30, remember, we want it to go down to strike prices. So in this case, the out of the money would have been 78.30 or 78.26. 2 strikes down would be 78.18. And as you can see, it did hit 78.18, so you would have made the full profit potential. Same thing over on the USD Swiss franc. It does not open until 8 a.m. Okay, so in this case, the at the money would have been, let's see, the at the money was 98.25 because that's where the price bar actually closed, and that would have been this one at 98.26. It needed to go at least to 98.34 if you did at the money. Now, if you did out of the money, that would have been this one, and it would need to go at least to 38. In this case, it actually went up to 43, which was this strike. So you would have made, more than likely, you would have made your profit target by going in at 98.30 or even 98.34.